Hi everyone, Don Singletary. Today's video we're going to be talking about developing your trading plan, your win rate, your trade log, how do you practice trade, and how do you develop your own reward risk ratio that works for you. Today we're going to talk about the real crux of learning to day trade successfully, or any kind of trading really. It takes practice, it takes skill, it takes some patience, and not everybody can do it, and it isn't really appropriate for everybody. You know, I talk extensively in the book about you should practice and keep a meticulous trade log until you have 25 successful trades in a row. Now, I'm going to define what that successful means. It may not be what you think, but I'll talk about that in a minute. But this is the most personal task you'll have because everybody has different account size, different risk tolerance. We don't all like the same food, music, and clothes, and we're not going to like the same trading styles and have one that works for us either. We're going to have to practice until we develop our own, and that's what we're going to talk about today. If you need a little bit of motivation, think about this. You're trying to learn how to tap a glass screen, Gorilla Glass, or click a mouse and make money from anywhere you sit, virtually anywhere in the world where they have internet. And it's a pretty remarkable thing. It's a nice time to be alive and kicking because things like this just weren't available even a few years ago. Now, professional traders actually lose more trades than they win. And a lot of people think you just throw people into trading and let them figure it out. And if they use the right trade indicators, it's going to be magic and they'll get rich quick. Of course, that's tooth fairy, Easter rabbit territory, so we'll stay out of there. Let's talk about the real deal for a moment. Professional traders understand that your win rate for a break even and your reward risk ratio are going to have to match or you're going to be losing money. In other words, you have to be able to figure out how to make more money in the trades you do win than you lose in the trades you don't win. And that's what this table up here on the screen is all about. Now, a moment ago when I said you need to practice until you can have 25 consecutive successful trades in a row. Well, successful trades, and this is important, include the winners and the losers. You can have winning successful trades and losing successful trades. And it all has to do, again, with the chart that you see on the screen right now. You have to be able to get the right ratio and the right risk reward in order to consistently have a profit. Trading, especially day trading, is really a business, and you don't start a business without some research and preparation. The home run king in baseball strikes out a lot more times than he actually hits a home run. Architect, plumber, mechanic, it doesn't matter what skill set you're trying to achieve in life. If you don't go about learning it the correct way, you won't last. The best estimates are that about 85 to 90% of day traders do not last for a period of 2 years. And I think it's probably true, but I think the main reason is they don't understand they have to train and prepare just like they would for any other job. Let's study some of the figures on this chart. Surely you don't have to be good at math to know that just because something's on a chart, it doesn't mean that it's possible. Let me give you an example of that. Look down at the bottom and you see the 9.1% with a 10-to-1 reward risk ratio. The amount of volatility you need in a market to make profits when you only are winning 1 out of 10 trades is enormous. It just isn't practical. You can look at the dollar fluctuation amount during the day of, say, the NASDAQ100 Micro Futures, and you don't find that kind of volatility there. Therefore, most of the practical numbers on this chart for trading, day trading, the micro futures are going to be in the top half of the chart. Now, it doesn't do any good just to tell somebody to go practice trade. You need to be able to test some of the numbers that we're putting on the board here. Now, right in the middle of the top half of the chart is the 25% line. So let's take this example and run with it. That means 25%. You got to win 1 of 4 trades minimum to be able just to break even. That's if your risk reward is 3-to-1, or You try to make $60 on a trade and you exit a trade at $20 to avoid letting your losses outgrow your wins. And that ratio is 3 to 1, of course. Now, if you're trading the NASDAQ100 at $2 a point, a $60 win or reward is 30 points at $2 a point, and the risk is 10 points at $2 a point, or $20. Now remember, this is only in theory. You may make more than 60 sometimes, or you might make less than 60 sometimes, and you might lose more than 20 sometimes, or sometimes you'll lose less than 20. So this is why you keep a trade log, so you can keep those averages to know if this is workable for you or not. And you'll make adjustments as you go along, and you'll be able to tell from visiting your trade log and doing the averages whether your problem is you're letting your losses go too long or you're taking your profits too quickly. A lot of parameters like that. And as you get experience, you're training your brain. You're getting your muscles in shape there so you can help make these decisions. And of course, if the 3 to 1 doesn't work for you at 25%, back down and try the 2.5 to 1 or some other multiple that might appeal to you after you've done some practice trading. This is how you learn. Well, that's quite a bit to think about today, so I hope you have some things you can work on and try to get better at trading. And remember, keep an accurate trade log and you'll be glad you did. Don't give up, because you'll find breakthroughs all the time as you go along. The more you do, the more you learn, of course. It's just like everything else. You might try going back to the book and reading the chapter on trading psychology again. Some hints in there to help you learn how to avoid letting your brain trick you. That's it for today. Next time, we'll look at some dollar fluctuation amounts on the NASDAQ100 Micro Futures. Be sure and subscribe to the channel here. I'd appreciate that. And hey, tell a friend. This is Don Singletary. I hope every day is a payday for you. And thank you.